USD Japanese yen has been in a clear uptrend since January last year and would have yielded great profits for traders if they had bought the dip. When is the next opportunity like this coming? Welcome to our market forecast videos here at Zenfinex. My name is Connor Woods and I'm the senior market analyst at the company who provides to you analytical and educational content on most trading days. Today's video is going to cover a USD Japanese yen forecast for the next few weeks following the recent US inflation data. I will give my outlook on the current market events before conducting a technical analysis on the chart highlighting potential trade ideas. So there's a real chain of events going on right now which are all working together to form higher pricing in the USD Japanese yen Forex pair. And let me run through them quickly. So there's this war in Ukraine going on. This looks to escalate, unfortunately. Putin in a public appearance said yesterday that Russia will continue the invasion of Ukraine until his noble aims are fulfilled. Not really sure what that means. Following this, a headline broke out which said the US and the UK are looking into a report that a chemical attack was used at a Ukrainian port. Really concerning this. And the bottom line is really, doesn't look like this is going away anytime soon, especially for maybe even the rest of this year. The dollar has a safe haven appeal in the Forex market and demand will keep coming for the dollar as the war continues. Now, there is a knock-on effect of the war too. Inflation data in the US was released yesterday and it showed inflation has reached 8.5%. This is the highest in more than 40 years, which feels like I'm saying this each month, which is true. It must be 4 or 5 months in a row we've had figures that are the highest in 40 years. But why are the prices increasing so much? Well, food and housing costs have exceeded dramatically. But one of the main reasons, of course, is the surge in fuel prices, which I'm sure we can all feel right now. This is because of the war and the subsequent sanctions placed on Russia, who are responsible, as we know, for a lot of oil and gas in the global economy. In fact, the consumer price index used to measure inflation was up 1.2% from February, which is the biggest monthly gain since September 2005. And just to let you know, a few years later, there was a recession. Anyway, high inflation is troubling US policymakers who are being criticised for being behind inflation for too long. They've been too slow to react, according to some people, and they failed to read the signs of inflation. The markets are now betting really on numerous 50 basis point interest rate hikes by the Federal Reserve to slow down inflation. In fact, yesterday's higher inflation reading could leave room for more hawkishness from the Federal Reserve, which will appreciate the dollar. And all of this is resulting in higher yields, which are correlated with this pair. And I'll show this on the chart right now and mark the buying opportunities for you. So then, looking at the USD Japanese yen chart that I have in front of me right now, and first of all, you probably, if you watched my video on the short this morning, which was on TikTok and Instagram Reels, etc., you will see this buying opportunity that I marked down. I want to explain that in a bit more detail. You can see really this huge uptrend that we're in, right? I mean, I can go back. I think it's all the way since January 2021, which I'll show on the daily chart. But look, you can see that you really just have to be a bit brave in this market and kind of get in at the most relevant dip that you can. And I'm looking at the chart now and I'm looking where prices can go. And I'm thinking that if we could have a dip down into this 50% of what is this buy to sell candle, and I've used this next one as well. But if you wanted to be a bit more aggressive, then you could use this, the actual candle where we had this selling pressure. And that was yesterday at the release of the CPI, where we had the weaker dollar, which was pure market manipulation. If we wanted to enter around this level and be a bit more aggressive with our stop loss sitting just below this low, then we could have a situation where we're looking at around a 4 risk reward trade, because for the next couple of weeks, maybe the next month or so, my take profit for any trade that I get in is going to be this 127 mark, which I'll mark for you, which you can see at the top of here. That's going to be my take profit level for the next month or so. So if we do get a dip into this 125.2 level, 1.5.26, if you watch my short, any level around there, then I'll be looking for a buy opportunity to target 127 and a target which will be a 4.4 risk reward trade. Really good trade there. Alternatively, we do have this, if we're going to get a deeper, if we do fall below this level, the reason my stop loss is there, because I think we then could potentially fall into this sort of mitigation area that we have here. And again, what I'd be doing is I'd be looking for a reaction around this mitigation level. And I'm on the 1 hour chart now. So the entries are going to be intraday plays, because when you go on the daily chart, I'll leave my drawings in there. I've actually got to zoom out to see when the last time we were in a negative trend, a downward trend, and that's all the way back in January 2021. Since then, we've just been literally skyrocketing. I mean, if you got in anywhere near the beginning of March, then well done to you, because that's a serious trade. But anyway, if I go onto my indicators and I actually look at the relative strength, you can actually see why I'm not interested in selling this pair, really. You can see that the market, you can see this clear RSI divergence, right? So we have the market going up, but we have RSI divergence going down, which, yes, of course, we're still in overbought territory, but the strength is so massive at the moment, and it's just really correlated with yield, which I'll show as well, that I just can't see the appetite to sell this market unless we get clear direction of a clear break of structure or clear changes in the fundamental outlook, which aren't coming at the moment. And the last thing I wanted to show you was this clear correlation that we have between US yields and also the USD Japanese yen chart. So what you can see is, at a time when US 10-year yields are rising, which, I mean, they're actually skyrocketing at the moment. You can actually see we're up at around this 2.74% mark. Maybe you can't even to look towards that 3% mark. And as you can see, at the same sort of time, we have this spike in USD Japanese yen as well. And when I mentioned that we had this double bottom formed in USD Japanese yen and in yields as well, that was a real clear sign to buy the market. And these are sorts of things that we pick up on in the Discord channel. So if you're not in the Discord channel, there's so much analysis on the dollar that goes out. We have daily videos going out, pre-London session, pre-New York session on the dollar, and lots of big things planned. So if you want to join that Discord channel for free, then just drop your comments in the comment section. I can send you a link, or use the link directly in the comments as well. And I'll be happy for everyone to join that and see the value that we put in there. But that's my prediction for USD Japanese yen. I see a move towards 127. I'm not interested in selling the market just yet until the fundamental picture changes. I'll be riding the wave sort of with US yields as well. 127 the target. Can't see the market falling much below the 122 mark. So that's it for USD Japanese yen. I hope everyone's enjoyed this video. If you did, make sure you give it a thumbs up and subscribe to our channel as well. It does help boost our channel. We appreciate all the subscriptions that we're getting, and the channel is growing nicely as well. Other than that, I hope everyone has a great trading day, and I'll catch you all for the next forecast video. Thank you very much.